Hello, this is Nguyen from Busines Development Office of Fondazione Telethon, a non-profit organization raising funds to study rare and genetic disease in Italy. Today, I would like to present to you how to pitch to venture capital in life sciences. Before going to venture capital, there are some general rules to be kept in mind. For example, it should be concise and focused. If you have 30 minutes to pitch, the presentation should have about 30 slides. Do not spend more than 1 minute per slide. Be honest and do not brag. Tell a story but not a fairy tale. Investors from venture capital have experience not only at laboratory but also in industry. So they know business and they know relevant science. Someone might run a startup before becoming an investor. Therefore, you should tell them a fact and a realistic expectation, not an ideal dream. Be humble and open to feedback. You might think that your technology is super cool and no one else could do better than you, but no one can know everything. You might still need other ingredients to be successful. If investors give you a negative comment or feedback, you should accept them with gratitude. Do not take it personally. You can learn from talking to investors even if the pitch does not take you to where you would like to go. Be persistent and do not give up easily. The path to get funding from VC might be long and hard. You might be rejected several times just because it is not the right moment, or they already have similar company in their portfolio, or your technology does not fit their priority. If you are rejected by one investor, just accept the fact, improve the pitch and move on to the next one, and who knows what you can get in the end. Be prepared for the access of VC if being invested. Considering that a fund from VC has its own lifetime, more or less 10 years, and the managing partners of this VC also need to raise money from other sources, for example, from pension fund, investment bank, or family office. After this lifetime, 10 years, VC also needs to pay a return to its own investor. So it must disinvest in the startup. Therefore, the investment time to the startup by a VC might last for 5 or 7, 8 years. And after this period, VC must exit by some ways, such as by initial public offering or IPO, which means that the startup will be listed on the stock exchange. There are numerous requirements to be listed, and you need to rely on underwriters, which are typically an investment bank for the IPO process. If the IPO is successful, the startup will be invested from the public. The second way is through merger and acquisition, or M&A, which means the startup will be bought by a bigger company, and normally this bigger company is already IPO. This approach is easier and faster than IPO, so it is often preferred by a VC. The third way is through a secondary sale. If IPO and M&A are not feasible, VC fund may sell its stake in the startup to other investors. And the last way is share buyback. If the startup is successful and if you gain profit, you can have power and money to buy back the stake of the VC in the startup. In life sciences, it's easy to gain profit in such a short time of 5, 6, 7, 8 years, so it's quite rare in life sciences. In the case of M&A, you will lose control of the startup. In the case of IPO and secondary sale, you might need to dilute the stake in the startup to receive further funding. This means that you cannot totally decide what you want to do with the startup. So be prepared for these scenarios once you get funded from the VC. It is better for you to win the non-diluted grant from other sources, for example, from public funding or from non-profit organization. Like this way, you don't need to dilute the percentage in the startup before VC comes in. To prepare for the pitch to a venture capital, depending on the requirements of each funding firm or pitch event, you can have time ranging from 5 minutes to 30 minutes to pitch. However, the structure of the presentation should be laid out as some below bullet points. The most important thing is the team. Experience and expertise are the skeleton of the team. If the technology is not strong enough, and it can fail. However, if the team is good enough, you can build another better technology. It could be easier if you are already a startup and the team is organized with some people with a title like CEO, COO or CMO, CFO. However, if the project is just coming out from the academic, it's normal that the team can be composed of people with a title like professor, master, PhD. That is very normal. In that case, it's better for you to reach to the technology transfer office to look for advice on the business aspects, such as market potential, competitors, business plan, timelines, and once being invested by the VC will help you build the effective team with people coming from the industry. The second thing you should keep in mind is to answer the question, who are the customer, the expected number of the customers. If you are doing research in a rare disease, this question might be tough to be addressed as the number of the rare disease patients are quite low. Although the regulatory agencies like FDA or EMA, they have offered some incentive to promote study rare diseases. It might be not easy for you to sustain the business due to the limited number of the patients and also the difficulties in price and reimbursement negotiation. Therefore, you should have a technology that can target numerous diseases. These diseases can be similar or have a same target, or you should have a platform from which you can target more than one disease. This will be less risky for VC to invest. The next thing is what is the problem you are trying to solve. Target a disease which does not have a currently effective treatment, or if it has an already approved drug, the drug maybe have some disadvantages such as high price or serious side effect. What is the solution for the problem? You should show the technology in a concise and simple way. Focus on main achievements. Do not use many jargons, for example, terms and abbreviations difficult to understand. The next question is who are the competitors? Understand who are using the similar technology and who are targeting the same disease like you. After that, you can show the answer for the question. What are the advantages with respect to the competitors? Show the advantages and what make you stand out, what make you better than the current competitors. The last question you need to address is what is timeline and milestone. For this question, you should use a Gantt chart to show clear timelines and milestone. Ideally, you should mention how much money would you need to complete each milestone, and you should be realistic. For example, if you are still in preclinical phase, it is impossible for you to say that you will enter the phase 1 in 1 year. To enter the phase 1, you need to prepare the data to prove that the drug is safe in animal models. You need to prepare the regulatory documents to get the approval to start the clinical trial. You also need to prepare to have the drug with the GMP requirements. You need also to recruit the patients. So just be realistic about this part. And overall, you should prepare as much as possible before reaching to any VC. And again, if you are coming from the academic, it's better to ask help and support from Technology Transfer Office. And with that, I am finishing my presentation, and I wish you the best of luck on the way of finding funding and investment from the VC. Thank you and bye-bye.